Hi, I'm Dr. David Eifrig. You may know me as an analyst and writer on wealth and retirement, but I'm also the CEO of Marketwise, the parent company to Stansberry Research, Chaikin Analytics, and Altimetry. I'm here to make one of the biggest and most exciting announcements in the history of our firm, and I'm joined by the publishers and lead analysts of the two corporate affiliates I just mentioned. I want to get right to the eye-opening news we'll be sharing today, so I'll keep their introductions brief. Mark Chaikin is the publisher and CEO of Chaikin Analytics. His proprietary stock rating system, called the Power Gauge, is the result of 50 years of deep research into the markets as an entrepreneur, advisor to the high net worth clients, and the author of a celebrated stock rating system, part of which appears in every Bloomberg terminal in the world. Welcome, Mark.
Thank you, Doc. It's pretty rare that the three of us are even in one place at the same time, much less making an announcement like this one today. So this is really exciting to me.
I'm also joined by Joel Lippman, Chief Investment Strategist of Altimetry. Joel's equity, bond, and market timing research is so celebrated that every one of the 10 biggest money managers in the world has followed his research, along with a who's who of ultra high net worth clients, hedge funds, and family offices, often paying to the tune of $5,000 or $10,000 per month. He's also the leading figure in an entire branch of financial accounting, one that uncovers and corrects the deceptions of our broken corporate accounting rules today, and shows you the real truth about companies' profitability. To give just one example of his astonishing track record for his readers, he anticipated the rebound after stocks crashed in 2020 and recommended 18 different stocks that have gone on to at least double, one climbing as high as 859%. Joel, welcome.
That's very kind, Doc. It's an honor to be on the same team as folks like you and Mark, and to be part of this announcement today, because I think we're all in for some serious competition when it comes to our biggest recommended gains, and we welcome it. And it's good for our business, and it's even better for our readers.
I've asked Mark and Joel to join me because we know that our entire relationship with our subscribers is built on trust. No one, of course, is right about their stock recommendations or market outlooks 100% of the time. Anyone who even thinks that's possible shouldn't go anywhere near the markets. Our reputations as individuals and as a company are built on long, demonstrated track records of success, on guiding you through the storms of life in the markets with a steady hand, avoiding hysteria, unrealistic promises, and the psychological pitfalls that ruin most investors' outcomes in good markets and bad.
And Doc, a reputation like that takes years to build and only an instant to break.
It's not something we take lightly, ever. So when all three of us are staking our livelihoods and our credibility on an announcement like this, please take my word for it. It's something that deserves your attention.
Perfectly said, Joel. Today, I'll also want to introduce the new lead analyst joining our ranks, the brilliant entrepreneur, investor, and confidant to billionaires, Brad Thomas. Brad was an incredible get for our company, as you'll see in the next few minutes, and as I'm even more confident you'll see in the months and years to come, when I expect him to deliver some of the best, lowest risk, and most profitable investment ideas in our company's long history. Brad has an incredible story. He built an 8-figure fortune in real estate development, then lost nearly everything in a partnership that went sideways in the global financial crisis. Near bankruptcy and worried about how he was going to support his 5 young kids, Brad built everything back better, using his deep knowledge of valuing businesses and analyzing operations from his years of underwriting real estate deals. He's racked up more than $1 billion in real estate transactions, partnering with companies like Walmart, Home Depot, Dollar General, Advance Auto Parts, and dozens of other famous businesses. Brad has made multiple fortunes in real estate, written 2 authoritative books on real estate investment trusts, or REITs, investing, and even launched his own REIT-focused ETF on the New York Stock Exchange. But please, don't think of him as just a real estate guy. He's written about all kinds of investing for outlets like Forbes, MarketWatch, and The Street. He's taught at business schools, including NYU, Cornell, Georgetown, Penn State, and UNC. He's interviewed more than 100 CEOs, business leaders, and high net worth investors, and appeared as an analyst on Bloomberg, Fox, Barron's, CNN, Kiplinger, NPR, MSNBC, and other outlets. In 2010, he began sharing his insights on the website Seeking Alpha, where he's published close to 5,000 articles and became the #1 most followed author out of hundreds of Wall Street traders, PhDs, CFAs, and other investment professionals. He's credited with coining the term SWAN, or sleep well at night investing. But while most people think that means using only slow-moving investments like bonds, that couldn't be further from the truth. Today, Brad's detailing the secrets of how he rebuilt an 8-figure fortune far faster than he ever imagined possible by tapping into the insights and wealth of some of the richest and most successful people in the world. See, across his incredible career, Brad has acquired a deep contact list of multimillionaires and billionaires, many you may have heard of, like the late Sam Zell, Kyle Bass, and even soon-to-be President Donald Trump. More on that in a moment. But there are dozens more of these contacts you've likely never heard of. Folks among the thousands of centimillionaires and billionaires who prefer to enjoy their wealth completely out of the public eye, and have more than enough resources to keep it that way. These contacts are the kind of leg-up investing you simply cannot buy or replicate in any other way. Their insights and ideas are the key to how Brad rebuilt his personal fortune quickly and sustainably after 2008, and how a small group of his readers could have seen annualized gains of 44% per year over 5 years.
Now, Doc, there are obviously differences, but I see so much in common with Brad's story and my own. Like me, he's a lifelong entrepreneur, and like me, before Chaikin Analytics became a part of this company a few years ago, he's never had the right platform for his ideas until now. He's also never shared the type of research he will today. So kudos to the viewers who found him before now, because there's no question he's been sharing million-dollar ideas. But I guarantee you've never seen Brad like this before. But he's at home here. He belongs here. It's a win for him, and as you said, Doc, it's a huge get for us to publish Brad in this way.
I totally agree, Mark. And the other thing I'd like to add is Doc talked about before about reputation. And I just want to emphasize that all three of us are putting our money where our mouth is today. We're endorsing Brad, of course. We're joining our companies and our own financial interests, but we're also backing him in a special way that you'll learn about in the next few minutes. A guarantee backed up by our own work and reputations.
You'll hear the details of that in just a moment. But guys, I think it's time to hand over the mic to our event host, Elaine, who got quite the taste of the billionaire lifestyle over several days with Brad in South Florida.
It's a story you have to see, believe me. This isn't just about showing off with nice wine and shiny airplanes. Elaine and Brad quite literally went inside an investment that could essentially transfer thousands, tens of thousands, or a lot more into your pocket in the coming years if you pay attention. It's the kind of opportunity most folks will never see. We're so excited for you to meet Brad, hear his full story, and more importantly, hear the idea from a billionaire-backed industry he's so excited about today.
Hi, my name is Elena Spinola. I'm speaking to you from the iconic Breakers Resort in Palm Beach, Florida, where I've come to meet the real estate magnate, stock analyst, and insider to the world of the ultra-wealthy, Brad Thomas. Brad's personal story is entertaining and inspiring, from building shopping centers and industrial parks to worrying about how he was going to support his 5 children while he was on the verge of bankruptcy, to writing about world-class investment ideas from his kitchen table with virtually no audience, to becoming friends with the U.S. president. The last and most important chapter of this incredible renaissance, however, is the one happening right now, today. If high-quality investing research has played any part in your personal wealth and retirement journey, I guarantee you're going to want to see what Brad has to share today. Because the most remarkable part of his story is how he built back millions. Not by rolling up his sleeves on construction sites, but with a handful of insights that anyone can put to work from his network of ultra-wealthy friends and contacts. Doc Eifrig already told you about Brad's resume as a visionary investor who's put these secrets in the hands of ordinary folks. So, I don't want to waste another second that we could be spending with Brad. He's got a lot in store for you today that you won't want to miss. Brad Thomas, welcome.
Elaine, thank you for meeting me. And thank you to Doc, Mark, and Joel for their introduction. We'll get to the story of how I arrived here, but I can't tell you what an honor it is to be part of this company and how big my ambitions are for what comes next.
And what are those ambitions?
Well, for starters, if you know Stansberry Research or Chaikin Analytics or Altimetry, I'm telling you today that I expect this next phase of my research to be bigger, more comprehensive, and more potentially profitable than any one of them. And the competitive spirit there is friendly, of course, because I respect the heck out of these guys. But if you're watching this today and meeting me for the very first time, remember this moment, because that's what's going to happen. You'll look back on this and smile at the fact that you saw it coming and hopefully took my invitation to be a part of it today.
That's a big claim. Why should anyone believe that's possible?
Well, I'm an entrepreneur. I was raised by a single mother in Greenville, South Carolina, which back then was an industrial town involved in the textile industry. Definitely nothing fancy. I started out in real estate after college, and by 2008, I had built quite an empire. A few years prior, my equity was worth something like $25 million. I lost it because of a partnership that went sideways. And I've rebuilt a similar fortune largely as a stock investor, and especially through the relationships I've built with billionaires and other high net worth folks who've shown me deals and opportunities that almost no one else on earth will ever see. I'll show you some real examples today.
Given your success in real estate, at least besides this one bad situation, why turn your attention to stocks?
Because everything I could do in real estate and entrepreneurship, I could do more quickly and effectively in stocks. Equities have been the number one best investment in the world pretty much as long as they've existed. There really isn't any idea in the world you can't play and potentially profit from in the stock market. And whether I planned it or not, my life up to that point had given me an almost perfect course in selecting stock investments. The truth is, I didn't completely abandon real estate back then, and I haven't still today, because I love it. But in the aftermath of 2008, nobody was building. And yet I understood these world-class companies very deeply because I'd underwritten them for a decade, and I knew their financials and businesses inside and out.
Brad, this is skipping ahead a bit, but the second article you ever wrote on Seeking Alpha was about an emerging auto parts company called AutoZone, which you called the best-in-class company in what has turned out to be a very lucrative space in the years since. Anyone who paid attention to your idea in 2010 and held on would be up 1,052% today, about triple the return of the overall market.
That was a company I knew very well because I'd worked with a major auto parts company as a developer and a landlord. You don't rely on someone to pay you rent unless you understand their businesses inside and out. And it's a good one. That's a hugely important part of how I analyze stocks, which I'll come back to.
Soon after that, you wrote about the farming and outdoors retailer Tractor Supply Company.
Same thing there.
You talked about its stellar return on capital, sustainable growth, and wide moat, meaning its nearly insurmountable competitive advantage, which, of course, is the name you gave your research business some years later. Since then, Tractor Supply has gained as much as 1,254%, or nearly 4 times the S&P 500 index. A few weeks later, you wrote about the Extra Space Storage, the self-storage company. You called it an exceptional alpha opportunity in 2011 and the years ahead. It's up as much as 1,415% since, 4 times the S&P 500. Less than a month later, you recommended another auto parts retailer, O'Reilly Automotive. And take a look. From that day to now, it's an almost perfect up and to the right chart up as much as 1,966%, nearly 6 times the total return of the S&P 500. And by the way, folks, if you have questions about any of the gains or information we share today, you can see more information on the Details and Disclosures page linked below. Now, Brad, this is all during your first 2 months as a writer.
That was at the end of 2010. In the beginning of 2011, I had zero audience back then. I knew what I had to offer as a stock picker and analyst, no question. But when it came to writing about these ideas for folks like our viewers, I was brand new. I was sitting at my kitchen table, trying this for the first time. But Seeking Alpha is a crowdsourced platform. People vote with their feet, so to speak. And these kinds of successes began to help me build an audience very, very quickly. It enabled me to start a higher-end, paid research service and eventually stand up my own research firm, Wide Moat.
At Wide Moat, from 2016 to 2021, you built a model portfolio in your paid research that recorded 44% annualized gains over 5 years, nearly triple what you would have seen in the S&P 500 over the same period.
That one example has a lot of similarities to what I want to show you today, a lot. Except the environment today is much, much better. And my experience and knowledge of these investments through connections I've made are much deeper as well. So earlier, if you ask why I pivoted to stock investing after I lost everything, the short answer is that I knew I could see these kind of results and share them with folks like our viewers. And please hear me when I say this. I don't care what you're hearing about the market or valuations. There's a 2009-like moment happening right now, except maybe even better in the specific area I came to talk about today. To me, it was obvious back then, and it's just as obvious today.
You say obvious, but I know most people at home didn't feel like it was easy to find stock winners in the aftermath of 2008.
Let me be clear, Lane. If truly high-quality, market-beating investing was easy, everyone would do it. If building multi-million-dollar wealth were easy, obviously, same thing. But I've now done it twice. And while I can't just give you that wealth, what I can give you is a strategy that could hand you big gains. This isn't just telling my experience, but sharing what I've learned from the network I've built over decades of the people who are the very best in the world at exactly this.
Your Rolodex of billionaires, multimillionaires, and the kind of folks you routinely take to meetings here at the Breakers.
One way real estate does differ from stocks is that it's much more based on relationships. This is something Donald Trump talks about a lot. So my life experience has given me the network in a way that would be really hard to replicate. I listen to their ideas and I pay attention to what they're looking at. But another big part of it is not just where they're investing, but where they spend. Don't forget, these folks operate in completely different universes from you and me. The sums are astronomical. And when you can hitch your wagon to just the tiniest piece of that, you could see bigger gains and more wealth than you might think is possible. And I'm not joking, Elaine.
When you talk about following the billionaires, so to speak, can you give an example of that?
Those are some ways to dip into billionaire wealth. But you don't have to do anything like that. You can do the same thing with ordinary public market investments that anyone can buy if you know where to look. And I want to show you exactly how I find those kinds of opportunities, several of which we're going to walk through today. And Elaine, I'm not going to BS you or the viewers and tell you that every single deal I've ever made or stock I've ever recommended is because of my billionaire connections, because that's not the case. But the access that I have and the set of ideas, macro and micro, I get from these folks really is a difference maker.
It's funny, Brad, because most of the viewers probably don't know much about your work as an analyst. You found opportunities to make extraordinary gains that could have beaten the S&P 500 by double, triple, 5 times, 6 times, or 8 times for those who held on over the years. But you're certainly not known for making risky, speculative bets. You're known for a rigorous analysis of income plays, including a large number based on your deep background in real estate. You also popularized the term SWAN, or sleep well at night investing.
Thank you for saying that. That will always be the core of what I do, and I think it should be the core for every investor. I built a portfolio for my grandson, which I expect he could grow for his entire life just by leaving his investments alone and letting the income compound. I'd love to introduce our viewers to all of that work. In fact, I'd like to give you a way to access a lot of it essentially for free if you're interested in joining me today. But frankly, what I want to talk about today is something much, much, much more ambitious. It's something I've been wanting to do for many, many years. It takes full advantage of everything I've learned in real estate and the public markets and in rebuilding my personal fortune. And specifically, I want to share that with individuals, folks who maybe have something in common with me back then. Obviously, I don't mean that you're broke, but perhaps you share the desire, the ambition to live with the peace and security that I now do. Everyone's going to be able to learn from this, but I suspect only a relative few will join me. That's okay. I know the right people will, and I think it could lead to the greatest transformation of their financial lives in a few years or less. It's going to be a model portfolio of a specific group of stocks with at least triple-digit upside and 5 times to 10 times upside in a few cases over the next few years, based on the knowledge and experience I've gained from my network of billionaire and multimillionaire friends.
The same kind of investments that you used to rapidly grow your wealth after that big misfortune?
100%. And you know, just about everyone else in the world today is talking about the election, and I'm not going to focus on that. I'm here to show you an approach I've used through every administration and every kind of economy. Because believe me, and the real divide in America isn't between left and right. It's frankly between rich and poor. So we can talk about politics if you want. We can certainly talk about the interest rate cuts that are going to be like rocket fuel for these opportunities. There's a perfect storm lining up behind these stocks today, and that's not some special insight on my part at all. The smartest people in the world are seeing it. But you can read that kind of thing anywhere, Lane. I want to take you inside and show you how easily you can take advantage of the same kind of investments that I have over and over without special accredited investor status or anything like that. By all means, I think you should have dividends, a foundation of blue chip stocks, and a plan for a serious market downturn. But in my opinion, this is the world's greatest asymmetrical bet. For the few folks who take me up on my offer today, this is going to be the kind of model portfolio where I believe even a modest allocation to a handful of ideas could account for 70% or 80% of the total gains you could see over the next few years. You don't have to take my word for it, Elaine. I'm going to show you these opportunities today in detail. In fact, in a few minutes, you and I are going to do some very cool on-the-ground research down the road at a place most folks who aren't billionaires will frankly never see.
I'm excited for that, and it brings me to a related question. We're in a pretty opulent setting right now, the famed Breakers Resorts in Palm Beach. Why here?
That's such a great and important question. And I'm actually here quite often, taking business meetings with developers, investors, and other ultra-high net worth people in my network. It's the hub of something far bigger than you can imagine in more ways than one. But I want to say something first, Elaine.
Please, go ahead.
We're going to have a lot of fun here today. But you know, there's a lot of get-rich-quick garbage out there on the internet. And one of their tactics is piggybacking off places like this to create a sort of bogus aura of wealth and prestige, even using these things like rented luxury cars. And that's just not me.
When we first met off screen, the main thing you wanted to talk about wasn't eye-opening wealth or even investing. It was your family, your kids. Stuff like how proud you are of your daughter, who's a front page reporter for the Wall Street Journal.
I've been so blessed, first and foremost, by my family and the people in my life. And I get to truly enjoy them because I know I could easily live off the income from dividend investments alone and never worry about money again. I want that for everybody. That's what motivates me. And the insights and opportunities I get at places like this matter a huge amount. They've enabled that in a huge way. Unlike those folks with rented out Lamborghinis, I have real access to real billionaires. And I know that using what I've learned from them can help lead you to a lot more wealth and financial security through investing, because that's what I've done myself and what I've given my small group of readers the opportunity to do for years. The thing is, most people with this kind of expertise are in no rush to share it with anyone else. But I don't agree on that one bit. So I don't expect people to be wooed by a fancy hotel or car, an airplane. It's pointless if it doesn't mean something for you. But I'm telling you, it does. Remember, I was broke 17 years ago. I had to sell my house and move in with my in-laws. The only reason I didn't file for bankruptcy was I didn't have the money to pay the bankruptcy lawyer. And I've become very wealthy again, in large part by tapping into just a tiny part of this unimaginable sums of money moving around in the world that most people will never see. Like reaching out to fill your coffee mug in Niagara Falls.
You said the Breakers is the hub of something really big and important. Can you explain?
The Breakers is an iconic property. It was modeled after the Villa Medici in Rome, and it was the icon of Gilded Age wealth and power that famously played host to the Rockefellers, the Vanderbilts, the Astors, Andrew Carnegie, J.P. Morgan, European royalty. You name it. Several presidents visited. It's half a century older than that other famous presidential hangout miles away, the Mar-a-Lago. And the Breakers was built by Henry Flagler, who after a series of early missteps and very modest successes, became John Rockefeller's founding partner in Standard Oil.
Talk about an important partnership with a successful person. That must have changed Flagler's life.
No kidding. Flagler had started out as a clerk in a grain business, making $5 a month plus room and board. He lost a ton of money in a salt mining venture in Michigan that collapsed at the end of the Civil War. And around 1850, he reconnected with an acquaintance who brokered his grain shipments in Ohio. Rockefeller was getting into the oil business. Standard Oil was born, and Rockefeller became the richest man in the world. Flagler's fortune grew to around $12 billion in today's dollars. For most people, that would be their legacy.
But not Flagler?
No, his legacy is here. If you live in South Florida, or you spent much time here, you know the name Flagler, even if you don't care one bit about oil or business history, because there are Flagler hospitals, Flagler schools, and also Flagler College. There's Flagler Beach and Flagler County. There's Flagler Street, the main east-west artery in Miami. They actually tried to name the city itself after him, but he declined. And if this seems like overkill, it's not. There is no place in America more comprehensively shaped by one man and his vision in Florida than Henry Flagler.
What did he do?
He envisioned everything that's here today. Florida was the poorest state in the nation. It was a dangerous swamp, not an inviting place. He was coming here because a physician recommended the warm air for his very ill wife. He saw what it could be. He built the very first important hotel here in St. Augustine. Then he built the railroad connecting Jacksonville and St. Augustine and continuing all the way down the coast to what's now Miami. It was nothing more than a trading outpost back then. Then, inspired by the building of the Panama Canal, he extended the railroad from Miami to Key West. That was an engineering marvel at the time, building across an open ocean. It wasn't thought it was possible. He put the Florida Keys on the map. He put Miami on the map. This is a development on a scale that most countries and national governments can barely dream of. And Flagler did it single-handedly, all through private enterprise without help from the government. Today, Florida has 23 million residents, 140 million annual visitors, and tourism spending of $125 billion a year. If Florida by itself were a country, it'd have one of the largest economies in the world, on par with Spain and South Korea. And Flagler basically is responsible for all of it.
That's pretty incredible.
Now imagine you'd seen just a small part of that coming. I mean, Walt Disney didn't arrive here until more than half a century later. And when he did, in the 1960s, literal swampland in Central Florida around where he wanted to build was suddenly worth millions. So just think about theme parks, resorts, the cruise industry, hotels, South Beach, the fine art world in Miami. Everything you see today has flowed from what Flagler did. You could have made a fortune in any one of them. And the Breakers was the symbolic epicenter of all of it, the gilded hub of everything Flagler built. But more than that, today it's still the hub of this network of extreme wealth, where the same kind of deals are getting done. You just need to know how to reach out your coffee cup and catch a small part of it. That's why we're here today.
Being here in South Florida, it really is astonishing how much Flagler and his vision is responsible for and how much wealth it's created.
Absolutely. And it's not like you needed to understand Flagler's vision in 1905 to have taken advantage of it. Even folks who bought Florida real estate 5 or 10 years ago could now be enjoying worry-free retirement from that alone, in a lot of cases.
I'm glad you mentioned real estate, Brad, because that's a big part of your story. You've written 4 books on real estate investing, including The Intelligent REIT Investor, a book about Donald Trump's real estate empire, and most recently, the popular guidebook REITs for Dummies. You've personally closed more than $1 billion in real estate transactions as a developer, landlord, and even underwriting the critical lending. Last year, you launched a REIT-focused ETF on the New York Stock Exchange.
I should jump in and say, I don't know if everyone is familiar with the term REIT, but it stands for Real Estate Investment Trust. This is a type of stock that anyone can buy that was actually set up by Congress more than 60 years ago to give individual investors access to income-producing real estate. In short, REITs get a handful of ludicrous federal tax advantages in exchange for passing 90% of their taxable income, and that's by law, mind you, onto shareholders, typically in the form of quarterly or monthly distributions. And if you understand how they're valued, you could see tremendous capital appreciation as well.
That touches on something really important, Brad, because you've had tremendous success both in physical real estate, in entrepreneurship, and in the stock market. Do you consider yourself a real estate guy or a stock analyst or something else?
Well, first of all, real estate connects everything. It's the biggest asset class in the world, bigger than every stock and bond on earth combined. Flagler's story is a great example of that. It's not just a concept. It's about changing the real physical world over decades in this enduring way. That's a real estate story, and that's why his name is everywhere. For almost every stock you buy, real estate is a huge part of its asset base and value. For example, Coca-Cola doesn't exist without factories and bottling plants. Or take something like AI, which is about as abstract and non-physical of a concept as you can think of. Do you know what Microsoft, Amazon, and NVIDIA can't get enough of? Data centers and chip factories. That's a modern-day gold rush that's happening right now.
Mark Twain famously said, "You should buy land because they're not making any more of it."
That's exactly right. But I hope you also see how much having an understanding of real estate gives you a leg up when it comes to everything in equity investing. It's silly to separate them. It's true, I started as a real estate developer and landlord out of college, building and managing projects for dozens of companies you know, like Walmart, Walgreens, CVS, Dollar General, Goodyear Tire, PetSmart, McDonald's, you name it. You have to learn a lot about these companies and their operations to do that. What kind of sites do they want? What's their foot traffic? How fast are they expanding? It's one of the deepest courses in analyzing public companies you can possibly get. And I was also underwriting the credit for these deals in a lot of these cases. I can't stress how important this is because, as Joel Lippman has talked about, credit is half the picture of everything in the markets. It's absolutely essential to underwriting stocks.
You experienced extraordinary success at a young age. You became a multimillionaire by 30. What happened next?
Well, it was a double whammy. My main partnership falling apart, and then the 2008 crisis, which of course hit real estate especially hard. My partner got involved in a hotel deal that I thought was a terrible idea. It was over leveraged. He didn't have the money. And in short, it was far more risky operationally than our other projects were. I broke it off with him, but not soon enough. And then the financial crisis kicked me when I was down. I learned a lot from all of that. I thought I was invincible, and I learned I wasn't. And if it seems like I'm just blaming my former partner, that's not the case. Because I'm ultimately responsible for myself and my investments and the risks involved. And in that kind of business, who you choose to work with is the number one risk. So that's on me.
You went from a multimillionaire to the verge of bankruptcy.
I remember sitting in a car in a Walmart parking lot crying. It wasn't just me. I had 5 kids. The oldest was in high school, and the youngest was in diapers at the time.
It's hard to imagine how you move forward from there, but you had to, of course.
I did. I realized that I might not have had anything in my bank account, but I did have some other things. I had everything I learned about investing, reading a balance sheet, an income statement, while working with huge companies like Walmart and also the tiny businesses where it was 100% on me to determine if they were going to be able to pay rent or not. And I also had a lot of contacts, extraordinarily wealthy and successful people whom I'd gotten to know in business. And I realized everything I did with real estate and business, I could do faster and more efficiently with the stock market. And I could share that knowledge with other people too. And so I bet on myself, working initially from my kitchen table with zero infrastructure and zero resources as an investment writer.
You believed your investing insights were something other folks would care about and even pay for.
I guess that took some audacity, but I've now written 4 books, somewhere north of 5,000 articles. I became the #1 author on Seeking Alpha. I had another investing letter that merged with Forbes. I was an advisor to a U.S. president. So I think the outcomes have proved me right. I made over $1 million on Seeking Alpha, which is definitely not the norm. A few years ago, I poured all of it into starting my research firm, Wide Moat. Every last penny. So in a sense, I was starting over from nothing again. It's not quite the same as being on the verge of bankruptcy, of course, but it felt the same, betting everything on myself.
Did you ever take a normal job?
1 or 2, but I never kept them. That's the lifelong entrepreneur in me. It's just who I am. The biggest focus of my writing on Seeking Alpha has been income and dividends, ultra high quality stuff with a laser focus on preserving your capital at all costs and then making sure you're getting paid income. Because I never wanted anyone to have to feel the way I did when I was sitting back in that car thinking about my 5 kids. But I also came to understand that pretty much everything I ever did as a developer, a property investor, or an entrepreneur, I can do a lot more quickly and efficiently through the markets.
I mentioned earlier the series of 1,000% plus maximum gains that could have come out of just your first few recommendations. But that success continued for years afterwards, both inside and outside what would be considered real estate investing. For example, you recommended Tanger, the company that manages outlet store malls, at pretty much the height of the COVID-19 crisis in September 2020 for gains as high as 553% so far.
Yes, those are outdoor outlet malls, by the way. And we saw their occupancy rates were great. They were staying open, they were paying rent, even with conservative assumptions about what would happen next. And if you look at the longer term chart, we called it near the absolute bottom. But there's a bit more to this story. As I used proprietary source cell phone tracking data that gave us a picture of what the actual foot traffic was at these malls in spite of the pandemic, and it was beyond what anyone ever imagined.
I want to come back to that, Brad. You also named a Read of the Year in January for several years, leading to full year gains as high as 87% in 2019, 41% in 2021, and 36% so far this year. But your biggest opportunities were by no means limited to REIT stocks. For example, you highlighted Dollar General before it was widely known, ahead of gains as high as 725% for anyone who held over the years.
It was a much smaller company back then, having just passed $10 billion in market capitalization.
In 2014, you recommended the private equity firm Blackstone, which could have delivered 722% gains so far, nearly 4 times better than the S&P 500. More recently, you recommended the chipmaker Broadcom, calling it a cash minting machine and the best high-yield tech blue chip you can buy for 2020 and far beyond, based on a whole list of winning financial metrics and a strong dividend. Since then, it has returned as much as 526%, nearly 7 times the gain of the S&P 500 over the same period in a roaring bull market. The examples go on and on. Homebuilder PulteGroup as much as 181% in less than 3 years, which is 7 times the return of the S&P 500. D.R. Horton, 4 times the S&P. Texas Pacific Land, more than 4 times the S&P. Innovative Industrial Properties, 3 times the S&P.
I'm proud of those results. And I want to emphasize that ever since I started writing, I've always been guided by capital preservation first and foremost, by that sleep well at night approach. When I lost nearly everything, I knew I never ever wanted to feel that way again. I never wanted anyone to have to feel that way. That always guided my recommendations.
A conservative approach, in other words.
I've never before had the platform or the audience and market setup to target the kind of upside potential I'm sharing about today. That said, I don't think conservative is quite the right word here. It's a really important point because first, I certainly had ideas that didn't succeed. No one's right all of the time. That goes without saying. And I made a lot of money and a lot of winning recommendations in areas that almost no one would call conservative. Real estate development isn't. Investing in malls at the height of COVID-19 isn't. Entrepreneurship certainly isn't. Yet, they've all helped me become wealthier and more secure than I ever imagined possible while limiting my risk.
I can't wait to hear what you're most excited about. But before you say, what do you mean by liberating?
You know, with Stansberry, Chaikin, and Altimetry, the folks I had the privilege of being introduced to today, we're talking about a very sophisticated audience. They already know the things I was just saying about asymmetrical strategies, where a handful of wins can account for most of your gains. They know about managing risk, and the fact is, I haven't had that at Seeking Alpha or a site like Forbes. That's a massive audience, and I had to be very careful what I chose to talk about. It's not a setting where I can go deep into my personal expertise I've gained from my network and share those kinds of plays I'm talking about today. It wouldn't be appropriate.
So, Brad, where do you see this wildly asymmetrical market opportunity today?
In small cap stocks. You know, Elaine, one thing I refuse to do is spend an hour waving my arms about a big opportunity without saying what the investment is. I hate that approach. And smaller stocks with literally hundreds of percent of upside potential aren't ever going to be a part of your plan. I don't want to waste your time. But if that's the case, I think you're making a huge mistake. I think it's the mega caps that spent the last few years reaching nosebleed valuations that are a risky proposition today. Small caps are the cheapest they've been in 25 years. And I can't stress this enough. We're not waiting anymore for the conditions where they'll soar. They're here right now. That's why I'm basically falling out of this chair with excitement at what I finally get to share today, and that's a good thing.
What do you mean?
Well, I've recommended smaller stocks since the very beginning as an analyst. I understand them very, very deeply because of my background as an entrepreneur and because I've had to analyze them for literally decades as a property developer.
You talked about companies like Walmart. Isn't that fairly different?
It is. But I also work with dozens of much smaller companies that were near the very beginning of their growth stages. And there's very little difference between those two situations, whether you're a landlord or an investor. Walmart is going to be a very reliable rent check, slow and steady. For a smaller and younger company, you have to do more homework to understand the business and the risks. But it also represented extraordinary potential for me, getting in with them on the ground floor. And I hardly need to tell you the same thing is true in stocks. And the potential for small caps is there no matter the economic environment. Every large cap, every company, period, started out small. But now today, it's so much better. I've never seen a stock market set up like this today.
How good is it in your view and why?
Once in a generation. I think it's a potential for 10-bagger upside in the best stocks. As a broad idea, I don't even think it's controversial today. Really smart folks have had an eye on this part of the market all year. This summer, we got a preview of what an explosive move in smaller stocks can look like. But all that excitement was based on anticipation of the catalyst that small caps have been waiting for to take off. Now that's over. It's not anticipation. It's not maybe. The catalyst is right here.
Are you talking about interest rate cuts?
Yes, rate cuts are rocket fuel for small cap stocks. I don't know how to put it any more clearly.
Why?
Smaller companies are more reliant on borrowing than big ones. So cheaper rates mean they pay less interest. That's money that goes straight to earnings. Rate cuts also mean they have access to cheaper debt going forward, which means they can invest in themselves. They can expand, they can build factories, do more of whatever they want to do, and grow. You know, I was at a meeting recently with the best minds at Stansberry, Chaikin Analytics, and Altimetry. And the smartest quantitative analysts at the whole company gave the presentation that just blew me away. This is from his presentation. Not only are small cap stocks at all-time cheap valuations, the upcoming rate cycle will act as a catalyst for a 5 to 10 year period of meaningful outperformance. Small caps are going to trounce large caps. If we can capitalize on this, we can all get rich.
That sounds appealing for sure, but can you show some proof?
Sure. Well, just as a starting point, small caps have dramatically outperformed over longer term. Here's a 30-year chart, and this starts from basically the beginning of the dot-com boom, which people think of as a dominant time for large stocks. But the fact is, you'd have done better if you'd forgotten about the Magnificent Seven type of stocks altogether and done this instead. And get this, since 1966, every $100 in large stocks would have grown into about $15,600. The same $100 in small caps would have become an astonishing $56,000, nearly 4 times the long-term performance. It's really not hard to see when you zoom out. Check out this chart, which goes back to nearly a century. The blue area shows some small cap outperformance based on a rolling 10-year period, and by how much? The gray areas are when large stocks won out, and by how much? If you showed this to a 5-year-old and said, which is the winner, blue or gray? I don't think it'd be hard for them to answer at all.
When you see it so plainly, you'd think more people would make the number one performing asset the core of their portfolio, or at least a big part of it. Is it because people don't know this or something else?
I think it's partly because people don't know. It's partly because small caps are more volatile, and that's a real drawback for some folks. I don't want to minimize that. Small caps tend to be cyclical. They do go through periods of underperformance, like the one we've been in. But the flip side of that is that when they outperform for years at a time, the magnitude of that is so big that they still win out overall. Here's one example. From 1995 to 2000, 6 years, large stocks had roughly double the gains of small ones. Then over the next 13 years, it was small caps that outperformed. But they didn't just do twice as well, or even 3 times. They delivered nearly 5 times the gains and for a much longer period.
Wow.
Yeah, during the upcycle, they're rocket ships. And this moment, right now, is the beginning of that cycle. There's no question. That's an unbelievable setup. And one thing I want to stress is this is not just a setup for a few months or even a year or two. Like interest rate cycles, these upcycles in small caps tend to last 5 to 10 years.
You're certainly not alone in seeing this opportunity. The folks who introduced you are obviously paying attention. Joel Lippman recommended a 186% winner in just 3 weeks in his microcap research. And Mark Chaikin came forward with a big research project focused on small caps a few months ago, where readers have already seen gains as high as 45%.
Yes, that's fantastic research in both cases. We're talking about 2 of the smartest guys in finance. I'm certainly proud, though not surprised, to be seeing the same big picture opportunity as them. And we're hardly alone. Barron's just ran this headline about a $30 billion portfolio manager whose small cap funds are so hot, he has to keep closing them to new investors. He said he doesn't invest in a company unless he sees at least 4 times upside. Wealth management firm Glenmead called the small cap rally a trend that's here to stay. Likewise, Tom Lee, head of research at FundStart, said he believes small caps are starting a multi-year rally, especially now that the uncertainty leading into the election is behind us.
I have to ask, though, if others are seeing similar opportunity in small stocks, what differentiates what you're doing today?
My network, no question. The kinds of opportunities I routinely hear about at places just like this. You know, I've talked about interviewing many dozens of powerful CEOs, working right alongside billionaires like the late Sam Zell.
Brad, I know you're connected to at least one very famous billionaire who you haven't yet mentioned directly.
I guess you're talking about Donald Trump.
That seems pretty important.
It is. It does mean a lot. I talk to Donald Trump regularly and consider him a close friend. I saw him twice a few months ago at Mar-a-Lago. He actually called me once from the White House in 2017. The screen on my phone showed it was a blocked caller, but for some reason I answered the call. Elaine, as you can imagine, I now always take my blocked calls. I first got to know him in 2013, before he was running for president, and I spent time with him on dozens of occasions. I've flown on his plane and talked with his kids, their spouses, and their families. I visited every single one of his real estate properties and written what, as far as I know, is the authoritative book on his real estate empire. He's written endorsements for my work. And thanks to that relationship, he put me on his Presidential Advisory Council during his last term. But Elaine, I want to say, I hesitated to bring up Trump for a reason. I have friends and colleagues and business partners of every political stripe, and I hope you do too. And my personal opinions about politics don't matter one iota when it comes to my stock ideas and helping you grow your wealth. That's what gets me going.
Well said, Brad. Sitting here in Florida just a few weeks after the election, no less, I think most are ready for a break from the overheated political discourse. But when you talk about the power of your network, I can't think of anything that exemplifies that more than having frequent conversations with one of the most powerful people in the world. I imagine it could be an incredibly valuable relationship.
It's incredibly valuable, especially now. And Elaine, I'm really proud of that relationship and what it represents about my story. I mean, again, imagine going from broke to advising the future president in less than 10 years. And another time and place, I probably share a lot more stories and details about those experiences. I expect to have that opportunity in my published research, and it's going to be very interesting for folks who see it. But I don't think a single person watching this came here for my political opinions. Not one. I think they're interested in whether my ideas could help them make a lot of money with reasonable risk and much faster than most people imagine possible. And I have literally zero doubt about that. The forces lining up behind small caps and the specific ideas I came forward to share are way bigger than who's in office. Small caps historically outperform their larger peers 6 and 12 months after an election, regardless of who wins. That's based on data going back to 1980. They also very significantly outperform large caps, nearly double in the average gains in the 12 months after rate cuts, which just started in September.
Brad, you obviously named your research firm Wide Moat for a reason. Can you talk about that?
Yeah, most people believe there's an ironclad relationship between risk and return, meaning that managing risk has to mean settling for average or below average gains. And that big potential means taking on a lot more risk. I frankly don't agree because, first of all, when you see these numbers for small caps that I've shown, that includes everything small. And 40% of the companies in the Russell 2000, which is a broad small cap index, are unprofitable. They have zero earnings. So even if you just narrowed it down to companies with profits, already you could be seeing bigger gains with less risk. But my strategy is a lot more targeted than that. We're going to focus on income, which is a way to get paid while you wait for big potential gains. We're going to focus on ideas I've developed thanks in part to my billionaire network and tied to the unbelievable sums of wealth that they're investing and spending, a lot of which is flowing back into the markets today. And we're going to do what I've always done as an analyst and focus on wide moats.
Can you give some examples of what you mean by a wide moat?
Sure. It always starts with the kind of analysis that I've done for 35 years, understanding who is absolutely, no question, going to be able to pay their rent, or when it comes to a lot of equity opportunities, paying their dividends or distributions. And then the second part is looking at growth. Who might go from 1 or 2 locations to dozens to hundreds, potentially? Finding income opportunities really is a wide moat in itself because income compounds. There are a lot of sneaky stock charts in real estate, for example, where the chart looks like it goes sideways or only slightly up over a long period of time. But you could be making 10% or 12% a year in that stock, compounding. And you could have done even better with the buy low, sell high opportunities created by irrational investors who don't understand the business. We've done a lot of that work.
You're talking about a kind of competitive advantage in the market, taking advantage of that inefficiency and the fact that most people overlook income plays.
That's right. But there are others. The classic examples of wide moats, as you may know, are typically ultra high quality blue chip companies that are effectively, they have a monopoly over what they do. True monopolies are illegal, but it's possible to find situations that are close. For example, this is an all-time chart of a company called ASML, which has an estimated 90% market share in a very specific kind of equipment that's critical in making microchips. It would have turned every $5,000 investment into about $2.3 million over 30 years. Of course, that's an extraordinary example, but look at Google. From the moment Google appeared, how many times have you used anything else for their search? And how much would you have earned if you ignored all the noise in the world and the markets and just held on? Almost 70 times your money is the answer to that.
If you'd had the wisdom to buy these companies and simply hold on, you could have done extraordinarily well.
Elaine, there are other kinds of moats up and down the scale of company size. One strategy that I've talked about today is following billionaires into their best ideas, similar to what I've done throughout my career. That's not a guarantee of success, of course, but there's no question it's a durable competitive advantage. It's why I've talked a lot today about the investing ideas I've gotten from folks like the late Sam Zell and the high net worth business people who frequent the breakers right here. But there's another closely related idea that most people don't think about at all.
And what's that?
Looking not just where these ultra wealthy folks invest, but where they spend their money. It's a huge leg up in the markets, in my view.
How so?
Billionaire spending is evergreen. These are not the folks who are cutting back when there's a recession or worrying about the economy. And it's elastic too. Meaning, if the price of their landscaping goes up, say, about 20% or even 50%, they're not going to get out their gardening gloves and do it themselves. They're just going to accept the higher prices without batting an eye. It's nothing to them.
That makes a lot of sense.
So look at fine art, for example. An index of art prices has roughly tripled the S&P 500 since 2000. Why do you think that is? Or look at a company like LVMH, that's Louis Vuitton. I mean, the famous brands right there in the name tell you pretty much everything about who the audience is. The CEO is the 5th richest person in the world, right between Jeff Bezos and Warren Buffett. Because the business model is rich people's money, and the stock could have multiplied your own wealth more than 40-fold long-term if you simply understood how wide of a moat that is and owned these shares. Just take a look.
You hear so much during economic downturns about people cutting back, trying to save on groceries, things like that. But I'm guessing most people who buy Louis Vuitton bags don't think like that.
Exactly. One reason it's been a great investment, but also whatever you think about wealth inequality, it doesn't matter. The fact is that the wealth at the top is mind-boggling. The richest 5% of Americans own 2/3 of all of this wealth, and the top 1% controls well over half of all stocks. Again, whatever you think about that, it's just logical to go where the money is. And what we're talking about here is an order of magnitude more than everything else, including me. I mean, I've done very well, and I routinely spend time with folks in my network who are hundreds or thousands of times wealthier than me. Think about that. And then think about the opportunity in business that profits from something these people spend that money on, something they need, ideally on a recurring basis.
I can see how that could be extremely lucrative.
I agree. But instead of just talking about it, why don't we go check out an opportunity like that for ourselves?
Can you tell us a bit more about where we're going?
To the airport. But don't worry, you don't need a bag or even an ID. I just want to show you an opportunity for my ultra wealthy network that combines all of the wide moat characteristics I just talked to you about.
Okay, let's go. So Brad, where are we going?
It's a secret. I can't tell you that. But I will tell you there's a lot of money inside of this building. We're almost there. Hold on.
Brad, this is not the airport I thought we were going to.
No, it's not. The rich don't stand in line for TSA. They sometimes use private areas of the same big international airports, you know. But then there are a lot of airports like this one, just up the road from Miami International, that are known mostly to folks with private jets like my friend Jay, who I mentioned earlier.
So where are we?
We're in a complex of private jet hangars. Now, just to give you an idea of some of the people who keep their jets here, at least one of them, the 5 richest people in the world, is on this list. So are a very famous rapper and a high-profile music producer. These are people that are never going to set foot in that other part of this or any airport again.
I think most folks know that the ultra-rich don't fly commercial. Even the most luxurious first-class product doesn't compare.
That's right. The biggest factor being those products still fly on a set schedule, not your schedule. And Elaine, I don't want to get caught up on the benefits of flying private because they're obvious and they're not the point today. What I want to show you is there's a whole infrastructure here that supports that. When people like my friend Jay need to go somewhere, they make a call, or probably one of their assistants does, and pilots start flight planning. Ground staff start preparing things. Fuel trucks come in. Catering gets prepared and loaded onto the jet. Those are just a few examples. And there's someone taking a piece of each and every part of that, of course. And don't forget, these are aircraft that can easily cost $50 million and sometimes closer to $100 million. The operating costs are millions per year, at least. And to the folks that do this, it's barely a thought. It's like paying your cell phone bill.
There are people and businesses making a nice profit providing these services, taking a healthy percentage of those millions upon millions.
Exactly. And one of those businesses is very specifically within my area of expertise. It's a kind of landlord with a near monopoly on what it does.
One of those wide moat characteristics you mentioned earlier.
That's right. And it's one of several. It is a functional lead on this type of real estate already, and if somebody wants to compete, well, they can try, but it's not so easy. Airports are heavily regulated. You can't just show up and start building. This company is already years ahead in building and owning this very specialized facility and in the premium locations that billionaires care about. So that's a huge moat. The other obvious one I mentioned is that this company serves a clientele that relies on them heavily and that has virtually unlimited money to spend.
Providing something valuable to rich folks can be an incredible business, as you've demonstrated.
That's right. Not just because of the amount of money involved, but because the relationship tends to be sticky.
Meaning
these rich folks are very, very likely to stick with them for a long time, and that means a steady and reliable income for the company. And they probably aren't going to bat an eye if pricing goes up 20 or 30 or even 50%. That's pricing power, and it's a big time advantage, especially, again, when there's virtually no alternative of similar quality.
a lot of wide moat characteristics, in other words.
Yet this small cap company is almost completely unknown. I'm sure you've never heard of it, and the stock has some very big and specific catalysts on the horizon. There's one specific move, a kind of conversion that I'm anticipating that could send it soaring. It's also a very prime candidate for a buyout offer.
Brad, that's something you've had a ton of success with in your analyst career. By my count, you've recommended nearly 20 different small companies that went on to be acquired, particularly in the real estate related companies like the opportunity here today. For example, you highlighted Catchmark Timber as a promising investment years ahead of a buyout offer at 55% premium to the share price. And you predicted WPT Industrial would be the target of an acquisition, which saw a 17% premium from one of the potential buyers you named. In 2021, you said there was a strong likelihood data center REIT CyrusOne could be an acquisition target and specifically highlighted private equity firm KKR as a potential buyer. 3 months later, that's exactly what happened at a 25% premium. In January of last year, you predicted Spirit Realty could be a target for industry giant Realty Income. 9 months later, that's exactly what happened. And folks who paid attention could have made 61% in that short time as a result. And in April of this year, you called Retail Opportunity Investments a prime takeover target. Less than 3 months later, Blackstone stepped in with a takeover bid that sent shares nearly 30% higher so far.
Elaine, I see a very similar situation here. Two of the biggest names in servicing private jet operations are Signature and Atlantic, which are what are called FBOs, or fixed base operators. When you land, you might taxi to Signature's base, and they're the ones who marshal you in. They're the ones who refuel your plane. They're handling a ton of logistics, and there's a private terminal facility inside.
And this company you're talking about today is a competitor to Signature and Atlantic?
Not exactly. What this company does is much simpler and less cost intensive. Signature and Atlantic make almost all their money from one thing, which is the markup on fuel. That means they're dealing with volatile commodity prices, and the rest of their business is complicated. It has a lot of moving parts, but I did bring them up for a reason, which is that both of those companies were bought out by massive private equity firms. Signature was bought by a group led by Blackstone in 2021, and Atlantic was gobbled up by KKR later that same year.
These are some very smart firms, needless to say, and obviously saw a profitable opportunity in these businesses that service the super rich.
Right. Folks they know well because they're likely to be clients in other capacities, I might add. And look at the results. Signature was a publicly traded stock in London, and it could have quadrupled your money in under a year leading into that private equity buyout. Atlantic, which has the bigger U.S. footprint, saw even more dramatic gains. Its previous owner bought it for $238 million and sold it for nearly $4.5 billion, nearly 20-fold gains.
Wow. They made 20-fold gains operating a similar company that you think is less attractive than the opportunity today?
That's absolutely right. And KKR isn't stupid. It's stepping in and buying at $4.5 billion after an 18-fold increase because it sees even bigger gains ahead.
What else can you tell us about the company you're targeting today?
Well, the growth is extraordinary. They're in the process of going from 4 airports to 7 by early next year, to 14 by 2028, and a medium-term target of 50. In other words, more than 10x growth, and the demand is incredible. Business jets have much longer lives than they used to. They're being kept in service, so that's constraining space already. On top of that, you have hundreds of new jets coming online every year, and they're much, much bigger than they used to be. You need to be building 2 million square feet of new hangars every year just to meet the demand of the new aircraft alone. And everyone wants to be in the same places. Miami, LA, New York. Ordinary folks may know LaGuardia, JFK, and Newark as the 3 major airports in New York. But for the private jet crowd, it's Teterboro in northern New Jersey. This company is building in those kinds of premium locations. We're at one of them right now. As an industry official told Business Jet News, Florida in general is definitely constrained. Everything from Miami, Fort Lauderdale, Naples, Orlando, Tampa, Jacksonville is full. In other words, we're standing on the real estate equivalent of a gold mine, and the profits from that gold mine are accelerating. It's just not something you worry about slowing down. Even in a recession, for example, when billionaires are your clients, this company's revenue is already up 6-fold in the last 2 years, while operating costs haven't changed at all, which means that all that additional money in the door has gone straight to profits. And that's before all the benefits of rate cuts that we talked about earlier.
Impressive numbers.
So you have this combination of a simple business model, a company that's spring-loaded for growth due to the insatiable demand, pricing power, all the money flowing into small caps, and the economic forces that could send them skyrocketing as a group. And your clientele is millionaires and billionaires too, which is one of the greatest wide moats of all. And it's a great example of the types of investments I have been able to isolate thanks to my experience and connections.
But you don't just take other people's ideas on faith.
Never. Doesn't matter if it's Warren Buffett. Again, this company is a landlord, so I understand the economics very deeply, and they're extremely attractive. And the way we analyze stocks at Wide Moat is very granular. We look at the sector, the market, the risk metrics. it's not just numbers on a piece of paper. I've also personally interviewed the CEO and CFO on this company just in the last few weeks. So I have some really valuable insight that I'll be sharing with folks who are interested today. At WideMoat, we never recommend anything that we don't feel confident could deliver a market-beating return of at least a solid double-digit annualized. But in this case, it's much better. This is one of the best small stock opportunities I've ever seen. I think it could be a 5-bagger in the next few years. It's something I want to get into the hands of everyone watching today right away, because I think it's going to be the start of something huge in more ways than one.
Brad, why don't we head back to the breakers and we'll talk about exactly what you have in mind.
Sounds good.
Brad, that's certainly some great boots on the ground research.
I'm glad. You know, investing, saving for retirement, obviously, those are things people take very seriously and for a very good reason. But I don't think that's incompatible with having fun. I think we do things better when we do them joyfully. And you've got to live well now. That's something I've always admired about Doc Eifrig and all of his work. You know, he's always had the focus in his research, how to be rich and how to live richly now. I'm glad we got to share that today.
You anticipate having a similar approach in your work?
Absolutely. And I think income and sleep well at night investments are at the heart of all of that. I mean, it's right there in the name. But this moment right now is a special opportunity. I've been analyzing stocks for nearly 20 years, talking to billionaires and extremely well-connected multimillionaires for nearly as long. And nobody's seen a pitch over the plate like the setup in small stocks today. And like I said, it's not a 3-month or a 6-month setup. And it's not something where you missed it if you didn't buy the exact day the Fed cuts rates. It's a setup for the next 5 to 10 years, beginning now. I can't tell you that any one stock or group of stocks is going to change your finances overnight, but what I can say is I've never seen an opportunity in the market as good as this to earn what I think could be enormous gains relatively quickly.
And to you, that starts with the stock opportunity we just checked out at the airport?
It's one of the most glaringly good opportunities I've ever seen, and nobody knows about it. I think it could treat you very, very well, no matter what happens next in the economy. And I want it to be the first thing you see and take advantage of when you become part of the small cap research I'm launching today.
Brad, I know you're going to be making a very exciting invitation to the folks watching.
I am. And I'll just say this outright. I know this is my one chance to introduce myself to readers at this company. I don't take that opportunity lightly. So I hope everyone will stick around to see that invitation because I truly want to wow you. Don't forget, for almost 17 years, I've poured everything into the endeavor that became WideMoat Research. I know I'm a new face to most people watching, but I also know that this is the day I meet the audience that's going to benefit and potentially profit from this work for years to come. My point is, I'm going to make an invitation today that I don't think we'll ever be able to replicate in terms of value and profit potential. And that starts with the stock opportunity we just checked out, which is one of the best I've ever seen anywhere. I've detailed this opportunity in a report I'd like to send everyone watching, called the #1 opportunity of my life, 500% upside as landlord to billionaires.
The title says a lot. You see 500% upside in this stock alone.
I do. And I sincerely hope that every last person watching takes at least some position in this stock. I truly think it's that good. It's effectively a way to set yourself up to collect money from what billionaires are spending on to dip your coffee cup into Niagara Falls, as I said earlier. And it's also backed by all the ludicrous tailwinds behind small stocks I mentioned earlier, and also very specific upside catalysts I predict are on that horizon. That's something that you basically never see, Elaine. I can't think of a better way to introduce myself and what I do. That said, it's just the beginning of what I'm excited about today.
You've talked about quite a number of ideas you've uncovered thanks to your billionaire Rolodex and this incredible market setup. Is there another you'd like to mention?
Well, there are 4 more recommendations I'm excited about today.
And every one of them is something with explosive upside potential in this generational setup in small caps. But Elaine, I have to be very careful here, and I want to explain why. I have tens of thousands of readers on Seeking Alpha who follow my every move. I have some very, very, very high-level elite sources like we've just talked about, folks whose identities I have to protect. I've already had situations where someone has taken my idea pretty much verbatim and passed them off as their own. And the thing is, I'm not going to let that happen here. Not for my own sake, but because it's completely unfair to readers. These small stock opportunities, by their very nature, can move very, very quickly due to their lower trading volume. So if I go into a lot of detail about my handful of absolute favorite small cap stocks, it could affect the quality of my recommendations, and I absolutely refuse to do that. They're too good and they're too valuable, and I respect my readers too much to risk that. In fact, all of these recommendations are going to be exclusively available to folks who sign up for my brand new small cap stock research letter called Wide Moat Confidential.
I can see where you get the name now.
Wide Moat Confidential will be the crown jewel of my career in financial research. My best ideas. I can't risk the tickers showing up anywhere on the internet by sharing too much here.
That makes a lot of sense. Is there anything you can tell us?
Well, I've also just wrapped up a second new report called The Secret Banking Business that could double your money or more. I can speak a little more openly about that one. I'll tell you that buying this stock in this report, you can immediately begin collecting an income yield of more than 10%. Again, that's in income alone. And I'll tell you that it's very much in line with the big idea that I just talked about when it comes to following the billionaire's money. It's a totally different business and sector, but it's another big, big way to take advantage of that massive edge in the markets that few people know about or have access to. This is a stock that could double in the next few years, and that could be just the beginning of the gains longer term.
That's in addition to the 500% upside opportunity we just visited, the one you detail in the first report you mentioned.
That's right. I couldn't be more excited for this to be the first research I get to share with the readers at this company.
Readers who followed your small stock research in the past could have seen gains like 138% in the 18 months on LADR, gains as high as 295% on HASI, and as high as 370% on ABR, and as much as 114% on PINE. Those are really spectacular results, Brad.
That's very kind, Elaine. Those were from when my research was almost entirely focused on REIT stocks. I'm obviously very excited today about Wide Moat Confidential, where we're going to be going way beyond REITs to harness the potential in small cap stocks today and the incredible upside in the ideas I'm bringing you.
Just to be clear, neither of the opportunities you've highlighted up to this point have been a REIT, correct?
That's exactly right. The opportunity we visited could become a REIT in the future, which is an extremely bullish catalyst I didn't have a chance to talk about here. That's something I'll share only with folks who sign up. But Wide Moat Confidential is about targeting triple-digit gains or higher every time in small cap stocks across the entire market with all of our favorite wide moat characteristics. We're not married to any one sector. I've written for years about banks, business development corporations or BDCs, super high quality dividend stocks, all kinds of wide moat opportunities. And I said I'm not going to get into the details, but to give you a sense, another one of my best ideas today is probably the single best small cap stock ideas of the future in autonomous cars, which is absolutely coming sooner than you'd think. I see hundreds of percent upside there. Another one is an energy play with a nearly 6% dividend yield right off the bat.
Brad, these are ideas you haven't mentioned yet.
That's right. You can get the details in a third brand new special report I'm sending out today entitled The 3 Best Wide Moat Stocks to Buy for the Small Cap Surge. I believe every one of them is at least double with much higher long-term potential. And I think you should invest in all 3 as the core of a small cap portfolio that I believe will run laps around everything else for the next several years, even if you do this with just a fairly modest amount of your total investment money.
Again, that's in addition to the #1 opportunity of my life and the secret banking business that could double your money or more, the 2 reports you already mentioned.
That's correct. So that's 5 of my favorite small caps that I'm officially recommending today. And it's still just the beginning of what I want to send folks who are excited to get started with my work right now. At the very beginning, I want to make the best introduction I possibly can. And I honestly, and I truly believe that the viewers who say yes today are going to look back and feel like they've bought shares at Amazon's or Apple's IPO, or like they bought Bitcoin back in 2009. That's what every ounce of my energy is going to do from this day forward. But yes, that's 3 brand new reports I'd like to send folks right away. And just for starters, covering 5 small cap ideas that include income, heaps of high net worth money, and hidden situations I've uncovered thanks to my network. All of the wide moat themes we talked about today. The potential upside is triple digits in every one of them, and the timing right now is spectacular.
You truly believe every reader should be making at least some allocation to these companies today?
Yes, definitely the names I touched on today, but also to small caps in general. This is just the beginning, Elaine. I've never seen a setup like this. And with 5 to 10 years of runway ahead of us, so absolutely yes, I'm hardly the only one saying this. And if that means you go buy the Russell 2000 or the S&P 600 or small cap ETF, then great, go for it. I think you'll at least see a portion of those gains. But I'm presenting you right now with a diversified group of small cap opportunities that you could buy today to be in a great position to see much, much more explosive upside. I mean, don't forget, my readers could have seen 44% annualized gains for 5 years the last time I published a small cap model portfolio, and that was in what was considered a bad environment for small cap stocks. Today you have trillions of dollars that have been collecting that 5% interest in things like money market accounts that are suddenly looking for somewhere else to go. At the exact moment that the market is rotating out of big stocks like the Magnificent Seven and waking up to the absurd undervaluation in small caps, you have pent-up demand in real estate, soaring wealth at the top like I've been talking about, plus huge tailwinds from things like AI. So what we're going to do is immediately start building out a much larger model portfolio of small cap opportunities using ideas from my network, targeting wide moats with triple digit potential in income wherever possible.
The network you've talked about is not really something you can put a price on.
You can't. And you know what? If I needed an incredible surgeon and I had a friend who worked at the Mayo Clinic or Sloan Kettering, I'd use that network too. I bet every single person watching has at least one area like that, where they're the person who could provide tremendous value to their network. I'm sure of it. My rather unusual life experiences have led me to have that kind of network with people with absolutely tremendous wealth and money-making prowess. You know, there's an idea in psychology called Dunbar's number, which is the idea that you can only mentally maintain a handful of truly intimate relationships and a larger network of around 150 people in total. That makes a lot of sense. And if you're a lawyer, I bet your network is in the legal community, where it belongs. Or maybe it's your church or the craft that you're passionate about. But there's no reason it shouldn't be the ultra wealthy or the folks at the breakers who connect me to some of the most hidden and potentially lucrative investing ideas in the world. What I want to do is give you all the upside of tapping into my network without interfering with yours. Of course, I'm not going to provide you with an insider information or anything like that. I think we're going to have tremendous success with that. And for me, it's probably the single most meaningful thing I can do. I know how blessed I've been coming back from the low points in my life, and I want to pay that forward 100 times over.
Beautifully said, Brad. Given your decades of experience with real estate and REITs, is that something you'll be covering in this research as well?
You know, that's a great question. Wide Moat Confidential isn't going to be a real estate letter, but I truly don't want to miss that opportunity in real estate today because it's huge, or to miss out on my very specialized expertise when it comes to these stocks in particular. This is how I made a personal fortune, and I want to become the #1 most followed writer on Seeking Alpha by showing people how to make a ton of money with these stocks. Which brings me to another really interesting bonus I'd like to send you today.
Brad, before you share that, isn't this a dangerous time for real estate? I keep seeing stories about things like buildings in Manhattan selling for a fraction of what they did before the pandemic.
Those are the stories that generate headlines, for sure. It's definitely the economic version of when it bleeds, it leads. And look, those stories are real. I wouldn't go anywhere near office real estate today, but that negativity is creating a classic investing setup because it casts a shadow over everything. And people forget that 84% of commercial real estate has nothing to do with office buildings. I mentioned data centers earlier. Knowing what you know about AI, what do you think the demand situation is like when it comes to things like new data centers?
I bet it's pretty high.
It's astronomical. Take a look at this. Here's a chart of private sector spending on things like data centers and manufacturing for electronics. It's up more than 17-fold in the last 2.5 years. The data centers under construction today are equal to half the entire existing supply nationwide, and nearly 100% of them are fully leased in advance. It's a similar situation with cell towers. Can you imagine the increase in demand and the market opportunity going from essentially zero to 331 million smartphone users in the last 20 years or so? And sure enough, here's a long-term chart of how if you could have done by investing in the stock of Crown Castle, which does nothing but lease cell towers and pays 90% of the proceeds back to shareholders in the form of dividends. The point being, there are parts of commercial real estate that are absolutely swimming in money and demand working beautifully as investments while everyone frets about downtown office buildings. And of course, we haven't even talked about housing. I assure you, folks looking for homes in the Sun Belt don't have the impression that the real estate market is dead. It's just the opposite. Home builder stocks have been skyrocketing because they can't build fast enough. So the point is, there are huge opportunities in real estate today that in many cases are on sale because investors see those negative headlines about office buildings and throw the baby out with the bathwater.
Makes sense. You mentioned wanting to sweeten the deal, so to speak, when it comes to your invitation today. You've already talked about the 3 brand new reports we're putting up on the screen, but what else have you got in store?
First of all, I'd like to send everyone another opportunity that I just talked about at the Stansberry Research Alliance meeting in Las Vegas. As you might know, that's a very elite event for readers with a subscription that costs upwards of $30,000. And I talked about a company that I followed for many years and that I'm, again, connected to very directly through my network. I know it very well. It's a business that serves as a landlord to tenants with very, very deep pockets. Tenants who barely batted an eye when the whole world shut down in 2020, who, from my perspective as a developer and a property owner for decades, are basically never, ever going to stop paying for any reason and are going to absorb increases over time as well. Any guesses who's that reliable?
I'm not sure. Government agencies?
Heck no. They change their mind all the time. They're giving up on in-person work in a lot of cases. Never mind the threat of shutdowns. I'll give you a big hint. I was being a little playful giving this talk in Las Vegas because we were standing right there.
You're talking about the casinos.
Bingo.
I had no idea they even had landlords.
Many do, and it's another incredible hidden business. Not building, not taking on construction risk or operational risk, but just collecting their money month after month. The revenues have tripled since 2020, and this is the kind of business where their revenue goes straight to taxable income in the form of dividends, and in turn gets paid out to shareholders. And it's another virtual monopoly type of business. It's a company that's a bit bigger than some of the others we've talked about, as you might expect, but that I consider an extremely high quality buy for an income and capital gain potential. It'd have to more than double in price just to reach the average valuation in the S&P 500. So I want you to see that video right away, where I share the details of that recommendation and a lot more of that kind of information and ideas that I can share more freely in that kind of elite setting.
That's valued at $2,500, which is a pretty modest estimate of what it would have cost you to be there as an in-person attendee.
The other thing, of course, Elaine, is that even though I'm by far most excited about this new work and the setup in small caps today, I want folks to see that work I've been doing in some of my existing research. Not as a paid-on, mind you, but a free bonus to get anyone who gets started with Wide Moat Confidential today. I think that's another great way to introduce myself and what I do and to give you more tools for growing your wealth with diversification and the least possible risk. I never tell anyone to go all in on a handful of small stocks or any single strategy, period. So everyone who says yes today is also going to get a full 12-month subscription to my flagship publication, The Wide Moat Letter, with my compliments.
Brad, I've had the chance to look over that research, and your readers are currently looking at open gains as high as 192%, 296%, and 156%, and even a staggering 809% so far, among many others. One of your recommendations has nearly doubled just since the beginning of last year, and your live recommendations offer yields as high as 7.9%, 8.1%, and 8.2% in addition to their capital gain potential.
The Wide Moat Letter doesn't cover the opportunity in spring-loaded small caps we talked about today. That's for a much more elite audience, but it does bring together a lot of the very best investing themes we talked about today. High yield income opportunities, real estate equities, a number of different kinds of wide moats, and a foundation of what I call swan stocks, which are the stocks that I think you can and should own for many years to grow your wealth while sleeping very well at night.
It's a great complement to what you're doing in Wide Moat Confidential, and a way for folks just getting to know you to take advantage of a lot more of your work, essentially for free when you join. And as you said earlier, Brad, it's a great opportunity to be in on the ground floor of your building, something truly special at Wide Moat Research.
Elaine, I have so much planned. And I'm grateful to Doc and Mark and Joel for the introduction, because maybe there was a time when those guys were new to you and you didn't know them by name. And now you rely on their work every day. I promise you that the same thing is going to happen here, and I want you with me from the beginning. That's why we're making a charter invitation to you today that I dearly hope you'll say yes to.
Charter membership is always a one-time only opportunity, with offer terms that simply can't ever be replicated anywhere else.
That's right. And that's especially true today because, yes, this is one and only charter invitation you'll ever see for Wide Moat Confidential, which is brand new today. It's also my first introduction to most of our viewers, period. And I'm not going to miss my shot. My Wide Moat research has been around for a number of years now. And like I said at the outset, we have really big things planned. That's why I'm giving away so much bonus research today, because this is the best chance you'll ever have to become a part of that. And I want you to see as much as possible of everything we do.
Brad, I want to talk about cost, but first, I want to put you on the spot a little bit because, quite frankly, as exciting as your ideas are and as impressive as your past results are, I think it's a big step for a lot of people to try something new like this.
You're absolutely right. I strongly believe that folks who get started with me today could see really spectacular gains fairly quickly in the ideas I've already talked about, and many more to come. You're never going to look back, or you're going to look back and congratulate yourself on what you saw coming. But in spite of everything, I don't want your decision today to come down to a leap of faith. That's not how I make decisions with my wealth, and it's not how I expect you to either. So I want to highlight something really, really important right now. Doc, Mark, and Joel are not just endorsing me with their kind words. They're backing up my offer today with their own work, meaning that if you try my research and decide it's not right for you, you can get back every penny you paid as a credit to Stansberry Research or Chaikin Analytics or Altimetry.
To be clear, this means you can spend this credit on any one of the dozens of research letters across all three of those research houses?
Correct. And you don't have to decide right now. But if you've worked with any of those firms or followed any of their dozens of brilliant analysts, you can rest easy knowing they've taken on all the risk in relation to this offer. It makes your decision a whole lot easier. And frankly, I'm honored that they're backing me up in this very concrete way today.
That's a huge addition to everything you're offering today. And folks, you don't have to write this down. You'll be able to see all the details in writing on the next page. Brad, let's get down to specifics. I asked you about cost.
Wide Moat Confidential is normally going to cost $5,000 per year. I don't just think that's reasonable for what you're getting. I think it's probably underpricing it. I do want this to be accessible to anyone who's in position to take advantage of it. But it's also for serious folks who understand the opportunity in smaller stocks and who can weather more volatility for the chance at truly extraordinary upside potential. For specialized, ultra high quality, small cap research, where even one idea could generate those kinds of gains and then some. That's a pittance. You're not going to find anything comparable for less. I'm sure of that. And if you think you have, I'd be extremely careful about what you're getting. One thing I know for certain is you absolutely cannot put a price on my network and access to the wealthiest and most powerfully connected people in the world. I don't want to sound like I'm bragging, but that network is a big part of my life's work, and I'm very proud of it.
$5,000 a year is a huge steal in that context.
The value you get is going to make that cost feel like the best and most obvious decision you've ever made. But let me go ahead and make things even easier because, as I said, $5,000 per year is going to be the normal price going forward. It's not the invitation I'm making for folks who joined us today. I want to show you my gratitude for being here, hearing my story, and becoming part of something special at the very start. So I'm cutting the usual price half if you say yes today through the button on your screen.
Meaning, folks who click that button can get everything you've talked about for $2,500 today.
That's right, Elaine.
That includes all 3 new special reports you described, their first full year of Wide Moat Confidential, including your full model portfolio and the new ideas you'll add going forward.
Yes, and I'm already deep in research on ideas I'm extremely excited about. We're going to be adding more opportunities with triple-digit upside potential basically right away. The environment in my idea pipeline, including from my wealthy network, are the very best they've ever been.
Plus, of course, the real estate investment opportunity you shared at an elite gathering in Las Vegas, and the full free bonus year of the Wide Moat Letter, which comes with its own model portfolio and archive of issues and special reports. That's a lot of value.
I'm not done either. There are actually 3 more bonuses I'd like to include in this package.
Wow, you did say you were really going for it with this first offer to new readers. I can't wait to hear this.
First, I'd like to send you 2 additional special reports published as part of another high-end letter at Wide Moat called High Yield Advisor. That's a letter I co-write with a whip-smart analyst named Stephen Hester. And like Wide Moat Confidential, it retails for $5,000 per year. The first is called Wall Street's Favorite Cash Machine. I truly believe this is one of the most valuable reports my team has ever produced. It hands you the keys to a group of stocks that most people have no idea about. They're like a little-known backdoor into investments similar to hedge funds or elite wealth managers that often require $1 million or more to invest in. Anybody can do this through the stock market. Like REITs, these little-known companies pay no corporate income tax and must, by law, pay out 90% of their taxable income to investors.
But you're not talking about REITs.
No, and not some close cousin in real estate either. But they do have this similar ludicrously tax-advantaged structure. And because of these special tax advantages, they're highly regulated. They have to be diversified and prudent and show receipts for everything they're doing. That's an investor's dream, and they're a straightforward way to potentially collect double-digit annual yields in addition to sometimes spectacular capital upside. I've used this exact type of investment throughout my career, and I highly, highly recommend it. We highlight 3 to get you started in this report, all of which I consider great buys today.
Folks, there's a button on your screen to get started at any time. You'll be able to read over everything Brad has mentioned, including the unprecedented credit guarantee backed by Stansberry Research, Chaikin Analytics, and Altimetry.
That's a great reminder, Elaine. The second report I'd like to send folks almost needs no introduction, given what we talked about today. It's called Small Cap Growth Engines, and it details 10 of my favorite small stock opportunities across my field of expertise. We're not talking about ideas I've sourced from something like running a stock screen or doing a bit of Bloomberg research. They're companies I've personally researched very deeply, often by speaking to management, and that I know very, very well. They're big-time beneficiaries of falling rates, and they offer a way to do something I talked about earlier, which is to essentially access a yield today that you may not be able to get in the future as rates come down, and then potentially see additional gains from the significant jump in these stock prices that I'm expecting. This is a deeply researched idea list, and I'm making it a very bullish watch list for Wide Moat Confidential. I'm not tracking these as live recommendations until I officially add them to the model portfolio, but they're extremely high upside ideas, given everything we've talked about. And if you do decide to get in, I always recommend you diversify across multiple positions and don't go all in on anything, no matter how good it seems. Of course, all investments carry risk, and past performance is no guarantee for future results. Small caps can be volatile, and for my recommendations, there is a buy up to price you should not chase.
That's 2 more reports, which we conservatively value at $1,500 each, covering a staggering 13 investable ideas that sound like they connect pretty directly to the most important themes you've talked about today.
Absolutely. And I think the best part is that they offer a combination of yield you can collect now and explosive potential going forward. That's a huge reason why you don't need to fret about some feat of perfect timing, which most folks know is absolutely impossible. These are ideas that I recommend you get into now. The forces I believe are going to lead to an absolute field day in small caps that are gathering fast. And again, the horizon for that opportunity is 5 to 10 years, not just a few months or even a year or two. But I'd rather you be early than late. And you don't have to sacrifice anything, in my view, to be in now when you're collecting income right away. I mean, again, these are the same kinds of plays that I used to show 44% annualized gains for 5 years for folks who were closely following my work a few years ago. And that was while most pundits and so-called experts were lamenting a terrible environment for small stocks, and pretty much no one wanted to own anything outside the Magnificent Seven. I think you're going to see almost the exact opposite in the coming years, and folks who see it now are going to be, number one, basking in adulation for having been so right, and number two, sitting on a giant pile of potential gains very soon.
Folks, making sure you don't miss out on that setup couldn't be simpler. We've covered a lot, and I want to remind you that you can look over every single thing Brad has detailed by clicking the button on your screen. You can review everything at your own pace before making a decision. But to sum up briefly, to start, Brad's offering a 50% discount to folks watching today for his never-before-seen elite small-cap investing research called Wide Moat Confidential. That includes his full model portfolio and your next full year of monthly issues with new ideas each month. He'll also be sending you all 3 of the reports he talked about earlier, detailing the investment opportunity we visited today, a second hidden opportunity serving the super wealthy, and 3 more of his favorite small wide moat stocks, whose details are only for paying subscribers. Those are all new reports. He'll also send you his Las Vegas presentation detailing one of his favorite real estate opportunities based on decades of experience, a free year of his flagship, the Wide Moat Letter, and the 2 reports he just spoke about, detailing 13 more small stock ideas he recommends today, many offering double-digit cash yields. And all this work is backed by a credit guarantee from Stansberry Research, Chaikin Analytics, and Altimetry, meaning that if you try this new research and decide it isn't for you for any reason, you can claim back every penny you paid as a credit you can use for any publication at any one of those research firms. It's a pretty incredible guarantee. But today's offer, the best charter offer with all of the bonuses, expires soon. So if you're interested, we urge you to place your order right now. Click the button on your screen to get started. Brad, I can't believe I'm saying this, but you mentioned 3 more bonuses and you only just named 2. Is there something else?
Yes, and it's a great example of the kind of thing we're going to be doing and a lot more in Wide Moat Confidential. It's an on-camera interview I just conducted with the CEO and CFO of my #1 small cap pick today. It's going to help you understand the extraordinary opportunity in this less than $1 billion stock. It's going to show you what's possible when you have a real network of connected folks and company leadership at your fingertips. And frankly, it's probably going to remind you how ridiculous it is to take ideas from folks who just grab a few members from the internet and say, oh, this company is undervalued, and act like they're doing real analysis. That's not how the most successful players in the market invest. It's not how I invest. It's sure as heck not how the billionaires or multimillionaires or family offices and wildly successful business people in my network invest.
I imagine investing with real access to the folks in charge can be a lot more lucrative and a lot more fun as well. And it sure does get to the heart of what we talked about. That interview, by the way, is just another bonus included 100% free only for subscribers to Wide Moat Confidential. Another $1,000 value on top of everything else we've mentioned. In fact, I want to put a summary up on the screen because we've talked about so much. This package of research is worth $11,999 in total, yet it just costs $2,500 to get started today. That's nearly 80% less than its value. It's 100% backed by Stansberry Research, Chaikin Analytics, and Altimetry, meaning you can claim back every penny you paid as credit at any one of those research firms if you decide you're unhappy for any reason, and still keep everything you received today with our compliments. Most importantly, of course, it gets you started today with your first full year of Wide Moat Confidential, which will normally cost $5,000 per year by itself. And with the 3 brand new special reports you've detailed, the 5 incredible small cap opportunities we've talked about, at probably the most exciting and potentially lucrative moment in decades for small stocks. This is, of course, a one-time only charter offer, meaning it's only for the folks who get started with Wide Moat Confidential now, at the very beginning, and it will never be repeated. Simply click the button on your screen right now to get started. Brad, is there anything else you'd like to add before we finish?
You know, Elaine, I talked at the outset about Henry Flagler, who built the breakers, and the ridiculous amount of wealth and prosperity and really world-changing growth that flowed from his vision for Florida. Flagler made a $12 billion fortune pretty quickly with Standard Oil. He could have just checked out for the rest of his life, but he didn't.
As you said, he became the architect of so much more.
He did. But not just that. I want to read something he said about what motivated him. He said, "The hardest problem a man has is how to help people. The desire to help others comes when a man has more than enough for his own needs. I've come to the conclusion that the best way to help others is to help them help themselves." I couldn't possibly put it any better when it comes to what drives me. I'm sorry if I'm being sentimental, but this is just my way of saying I'm inviting you into something very special. I don't need more money to be comfortable, and I certainly don't have to share these ideas that I come across through my network that have so much potential to put money into folks' pockets. I could just go take advantage of them myself. But that's small thinking. It's not who I want to be in the world. What I do want is to share my success. The small cap insights I've been honing for nearly 20 years since I shifted my energy almost completely to making money in stocks. And the unbelievably smart and connected high net worth network I've been building for even longer, which can be a leg up in the markets that's truly no way to put a price on. I want to help the people who see what a unique opportunity this is to get rich and sleep well at night and have a really good time doing it. And that's exactly what we're doing here at Wide Moat Confidential.
Beautifully said, Brad. Folks, this right now is your one-time only opportunity to be a part of that with an offer that will never be repeated. A nearly 80% total discount and a staggering 8 included bonuses, along with a satisfaction guarantee fully backed by Stansberry Research, Chaikin Analytics, and Altimetry. Brad, this was a lot of fun. Thank you so much.
It was my pleasure, Elaine.
I can't wait to see what you have in store for Wide Moat Confidential. And with that, place your order right now before this charter offer goes offline forever for the best possible deal. On behalf of Wide Moat Research, I'm Elena Spinola. Thank you for joining us.